All right, we are now live. So, hello and welcome to those of you joining just a few minutes early. My name is Charlotte. I will be your money show host for this session. I do have Natalie here with me in the Zoom room. We are ready to begin her presentation on time at 3:20 p.m. That is Eastern time, coming up in just a few short minutes. Thank you all so much for your patience. I hope you're enjoying the show so far. Those of you just joining us, hello and welcome. We will be getting started here on time in just a few short minutes at 3:20 p.m. Eastern Time. Thank you for your patience. Hello, everyone, and welcome to the session. I'm pleased to introduce Natalie Pace. She is the co creator of the Earth Gratitude Project and author of Amazon bestsellers, The ABCs of Money, 6th edition, and The Power of 8 Billion, It's Up to Us, and more. Natalie's easy as a pie chart nest egg strategies are enthusiastically recommended by Nobel Prize winning economist Gary S. Becker, former TD Ameritrade Chairman and CEO Joe Molia, and over 120,000 people who have transformed their lives and relationship with investing in money as a result of attending her retreats and reading her books. Now, to our live viewers, please share any questions you may have throughout the session in the live chat box. It's to the right next to the video player. Without further ado, Natalie, I will hand the mic over to you. I'll be here if you need me, but the floor is all yours.
Thank you so much. I have never seen this much interest in the SpaceX IPO since maybe the Google IPO, which, by the way, I called on Forbes on Fox way back in 2004. Now, this one is slightly different. Back in 2004, it was right after the dot-com recession, and everybody had really suffered so much from those that most people were saying, oh, you shouldn't believe in Google. I was really in the minority when I said definitely buy into this IPO. On this one, I want to talk about the pluses and minuses. I think the broad picture overview is that SpaceX has so many things going for it. And I want to remind everybody that investing really requires more than just picking a great company, although that's a great start. You also want to have an entry and an exit strategy. So we're going to be talking about a lot of different things that could help you with that. I would say yes, SpaceX. The real question here is when should you own it and how should you own it? So let's dive in to those ideas. So first of all, the S1 was just filed. The roadshow will begin on June 4th. Today is Tuesday, that's Thursday, and the first day of trading is expected to begin June 12th. Now, if it comes in at 1.6 trillion or higher, Elon Musk will be the world's first trillionaire. We will see. The pricing tends to happen in between the roadshow and the first day of trading. I will keep everybody updated on everything in my comments section of my blog that is already posted. So if you go to nataliepace.com/blog, the first blog that you're going to see is a SpaceX blog. I will be posting comments there. I'm also going to be doing a video conference tomorrow with updates, and I'll keep you posted on other things there, as well as that will be posted to my Substack if you prefer to listen to it as a podcast. So I do think it's a good idea to just make sure that you are subscribed to both YouTube and Substack. Both of them are just Natalie Pace, as well as monitoring the comment section of the SpaceX IPO blog, and of course, reading that as well. We cover in the blog the same things that we're going to be covering today, but I'm added a few because I updated this morning. So it's going to be the qualities of a successful IPO, deeper dive into management, opportunities and challenges of space exploration, Starlink, AI, valuation concerns, macro considerations, and should you buy now and how. So again, successful investing, what? SpaceX? I'd say yes. When? At the IPO or on a stock shopping list? We'll talk about that more. And then how? Individual investment or as part of a targeted fund. So the first thing we want to talk about is the Elon Musk premium. So I was talking to someone yesterday who doesn't know how to invest really, but just wants to own it because she believes that everything Elon Musk touches turns to gold and that he's just gonna, give us a habitation on Mars, and he and his brother are going to be growing the food there. So she's just a real Elon Musk lover, and there are plenty of them out there. In fact, Tesla earned less than $5 billion last year, and that is a third of what it earned just a few years ago when it earned 15 billion in net income. So it has had to cut prices on the Tesla cars, and yet it is still trading at very close to an all-time high. So we have a $1.56 trillion valuation for Tesla on a company that earned less than $5 billion, and it is on a downtrend because they've been having to cut prices due to the intense competition, especially in China, for electric vehicles. Now, SpaceX has similar valuation concerns. SpaceX actually lost $5 billion, and in its 25-year history has only had 1 year where it actually made money. So should a company that doesn't have earnings be worth $2 trillion? Cumulative the losses are over $41 billion. So when we look at the qualities of a successful IPO, and this is what I used to evaluate Google back in the day. It's this is listed in my first book, Put Your Money Where Your Heart Is. Be sure you're getting the second edition. In there, you'll see that I use this qualities of a successful IPO. And also, I compared it. The comparisons were Google, which again, I did pick up the IPO in 2004, and also General Motors, which at the time was really on the trajectory to go towards bankruptcy. And that's why I include those old school examples, is that you can see that the things that we predicted based on this metrics, based on this data statistics, you can see how well they prove out over time. So let's look at it in terms of SpaceX. And it's got a lot of very positive things. It's got outstanding products. Rockets, Starlink, AI, all of these are very outstanding. We'll dive into them a little bit more. They don't have outstanding sales growth yet, but if the Anthropic deal for their cloud comes through, and that is expected to start generating $15 billion annually, that will be very positive. That will be a big jump in their annual revenue. Impressive profit margins. No, they've been cash negative. So that's a negative, right? They only had 1 year of cash positive. Diversified revenue stream. Yes. In fact, they're hoping that their Starlink is really going to be the revenue driver, but they're even thinking, the cloud services is part of their AI platform. And they do want to have data centers in space powered by the sun. Elon Musk is proven. But honestly, when you think about, and I just want to use this one example here, SpaceX recovered the stranded Boeing crew in March of 2025. They also developed a pattern, a way of recovering, those boosters, right? Those booster rockets. That saves a lot of money because that was a single use prior to SpaceX's innovation. And when a company can innovate like that, that's a game changer. So that tells you the proof is in the pudding that the management team is really strong. The one downside is that the board is filled with Wall Street finance pros. So ideally, you want to have the board is well balanced with different skill sets. When you have an overabundance of Wall Street finance pros, there's two things that can happen. First of all, there's too much of a focus on the money, although I think that SpaceX has proven, because they have been cash negative for 25 years, that Elon Musk is able to lead and not be hindered too much by the money. But the second risk is something that anybody interested in buying into it should be aware of, and that is that this could be a liquidity event, the IPO, for those people who've invested in SpaceX for half a century. Now, when it's trading close to this, maybe even up to $2 trillion valuation, they are making bank on their investment. So you do always have to be concerned that the Wall Street insiders selling could drag down the share price at Main Street and retail traders' expense. And I think that is a risk that's worth considering. So when we think about the opportunities and challenges of space exploration, Boeing's disaster is one. That was something that benefited SpaceX. Virgin Orbit had to file for bankruptcy a few years ago. SpaceX was founded in 2002, and it has been cash negative for 24 out of 25 years of operation. Now, the interesting thing about SpaceX is they said, okay, space exploration and the rocket side, that is hard to monetize. So we're going to monetize it through the Starlink. So that is what they're hoping will be their cash cow. And they're even hoping that their new emphasis on cloud services through AI is going to be another one. So that's the opportunities of Starlink, is that it's going to be the revenue generator. And the revenue did indeed grow 50% year over year in the first quarter of, sorry, that should be 2026. Sorry about that. The satellite to mobile phone Wi-Fi in dead zones, this works for offshore drilling and oil. This works for governments. This works for the military. There's are simply a lot of applications. And if they are the only ones in that space, then of course their subscription model is going to be very sticky. People will need it and they won't want to cancel it. That is one of the challenges, however, because we are going to have intense Chinese and Russian competition. Also, the FCC radio frequency spectrum is very crowded right now. That's a lengthy process to get approvals. Low orbit is getting very crowded, risk of collisions. A lot of companies and countries are actually having to monitor it. The low Earth orbit is so crowded up there, and that's where all the Starlink Starlink satellites are. That's also where SpaceX wants to put their data centers, their solar powered data centers, which they've already filed for an application for. So this is a little risky. There haven't been any major collisions. They're very rare. But what we have seen is an increase of need to monitor and adjust by these companies. And that does require extra capital expense if you have to have that monitored. Also, the lifespan for the Starlink satellites is maybe 5 years, 7 years tops. And this is a rendering by National Geographic, just showing just how cluttered it is in low Earth orbit. The opportunities and challenges of AI. So Anthropic Cloud Services Agreement could be worth $15 billion annually. The idea of having data centers in space powered by the sun is very exciting, but also, again, remember that the low Earth orbit reduces the life expectancy of whatever you put up there. Like a satellite could last a lot longer if it were not in low Earth orbit. Same thing very likely with the data centers. Um, and again, competition, but another challenge, and we are seeing more of this, is that the deep fakes or the actual errors that AI can make may have liability associated with it. So we are seeing civil suits pop up that are blaming AI for various things from, murders, etc. And we could start seeing a little bit more of this. Of course, if you're a $2 trillion company, that's worth a lot of money and you can really fix things. We've seen that with other, basically our Magnificent Seven companies. They can do a lot with their multi-trillion-dollar valuation. But again, the valuation is pretty lofty. And the question here is, will the Wall Street whales profit at Main Street's expense? And as I mentioned in my blog, this happens a lot these days. A lot of the IPOs have been that kind of thing. So if you think about like the Lyft, the WeWork, the Snap IPOs, Uber has kind of recovered a little bit, but it spent a great deal of time underwater before it recovered to its back to where it is now. So I would just be careful because a lot of people say, "Oh, well, I'll just invest a little bit and then I'll just hang on to it." But there are considerations, right? Like again, what SpaceX, great thing to own. is now the best time to buy it, or should it be on a stock shopping list? There's another consideration. Will it just show up in one of your, like in our pie chart system, age appropriate, properly diversified, we include four hots. And two of the hot slices that we really like, as an ETF that is targeted for artificial intelligence, and iShares is ARTI, and an ETF that is targeted for breakthrough technology, TechB, TECB, both iShares. These, it's very likely that you're going to own SpaceX if you own those two. Now, the public trading isn't expected to start until June 12th, so we'll be monitoring that for you. But for a lot of people, it's going to be a lot more appropriate to own SpaceX within a targeted ETF and make sure that you do have these. Get a little extra performance in your portfolio. But you may not have to do anything to actually own it. It may just, be there because the manager, it definitely qualifies in both of those spaces. So the macro considerations, I want you to be aware of the fact that this could be the late stage of the business cycle. We did just see Canada announce a slight recession, so they've had 2 quarters of negative growth. There's no recession predicted for the United States, but as you can see in this chart, high gasoline and oil prices are highly correlated with recessions. So the longer that we have these high gas and oil prices, the worse that is for the economy. That could change the game. Now, economists are terrible at predicting recessions, largely because there are just so many moving parts in it. But again, our growth is being highly fueled by AI data centers. That's really been the driver and of the surprising growth in the United States. But the drag that happens on high gas and oil prices, that could be something that really takes down our CPI. It takes down pushes up the CPI, but takes down our consumer spending potential in things other than gasoline. And that is a problem because 70%, almost slightly under, of the United States economy is actually powered by the consumers. So if people cannot afford other things, that's going to show up as a surprise in GDP growth, and it could bring us down to a contraction. Again, it's not expected to. I'll show you real quickly what the expectations are. IMF is pretty good at updating it. Obviously, the Federal Reserve Board also updates it in their SEP. But right now, it's expected to be about 2.3% for 2026. So again, what SpaceX, when I would say stock shopping list, or let's check and see if it's part of a targeted fund. If you are a great investor and you know a lot about investing, then maybe you could consider an individual company. But if you are a great investor and you know a lot about investing, you're going to want to probably buy lower than you're buying right now. So it might be on a stock shopping list. You also want to know what your exit strategy is, because we have seen recessions that pull down. The most recent contraction, it didn't actually turn into a bear. It was just about a bear. Was in 2022 when the S&P went down 20%, but the Magnificent Seven companies were down 50, Tesla was down 67%. Now you might say, oh, well, it came back and it went to an all-time high again. But in normal recessions, it can take a lot longer, right? So, when we saw the Great Recession, it took about 5.5, 6 years. And in that time, you don't have that money and you're hoping and praying to crawl back to even. It's better to use bull markets to make money than to hope that you're making up losses. So you do want to have an exit strategy. On our pie chart system with the funds and the age appropriate, the exit strategy is simply rebalancing and making sure that you're age appropriate. And that's a capture gains strategy, right? It's not all, it's not nothing. So I do encourage you to learn more about that. We'll talk a little bit more about about what that strategy looks like and how you can do it. So again, volatility could definitely be a factor. And I am going to do another video conference tomorrow. If you would like to join us live, then you need to email info@nataliepace.com and put VideoCon in the subject line. Okay, you can join us live or subscribe at YouTube or Substack, Natalie Pace at both places, and you'll be notified when it is published, which will probably be late tomorrow night. Now, again, I talked about these two targeted ETFs, Tech B and ARDI, and I want to also talk a little bit about the TIMA's NASA fund. So this was only started a few months ago, and obviously it's trying to be very timely and it's got a great name. TIMA ETFs were only started in 2022. I think that this is dangerous because you don't know how well capitalized it is. It's an LLC, it's not publicly traded. And a lot of these smaller fund companies, they can get into trouble, especially if they have, targeted things like this, or if they have a lot of leverage. And I want to show you a poster child of what kind of trouble the fund can get into. Not even, just like the SpaceX could be fabulous, but the fund could get into trouble. And that could mean that your NASA fund wouldn't do well. So here's this one. Sorry, that's not the one I want. I want Nugget. So Nugget is a Dirección fund. And as you can see here, gold is very close to an all-time high. But this particular fund has lost money since its inception, which was in 2011. So how is that the case if this is a 2 times bull fund? And it has everything to do with Direccion's fund itself, the fund company. So again, even though NASA has a very sexy name attached to it, that's not the way that I would play that particular SpaceX thing. They're going to be marketing it a lot. And again, it's going to be easy for people to remember. And, it's pretty cheap to market this kind of thing on, any of our social media. And it is going to have SpaceX and all these other things in there as well. But again, the fact that it is owned by TIMA and you don't know the management team, and we do know that it's only been around for less than 4 years, and that particular fund is only a few months old, I think this raises the risk enough to just say no. So a few other things. This is what our pie chart looks like. So again, this is age appropriate. We're overweighting safe because stocks are at an all-time high and there are other risk factors out there. You don't have to. And then we also add, we have small, medium, large value growth and 4 hots. Now you can actually, this is a way to get safe, hot, and protected in one easy plan. You can update your own pie charts. We have, that's a simple web app. Email info@nataliepace.com with a sample pie chart in the subject line and just say, I want the web app, and we're happy to send that to you. It's free. So you can personalize your own, and it'll even tell you, what percentage of your portfolio you should have. SpaceX is creative disruption, and this is a big deal because the winner takes all. When you have a company that disrupts the marketplace, as Tesla did, as Apple did, as Nvidia did, and as SpaceX did, it can become the hottest thing out there. Now, these are still extremely lofty valuations for these companies. And a lot can happen over the next couple of decades that could intercede in between. So again, it's easy to make money in a bull market. It's easy to lose money in a bear market. And don't confuse a bull market with wisdom. Everybody has been making a lot of money essentially since 2009 with a few blips and exceptions. Recessions, in normal recession, the pandemic recession was only 3 months. We printed up $4 or $5 trillion. That's not going to happen with the next one. So it's pretty important for you to be age appropriate, properly diversified, and to have a strategy for SpaceX IPO that doesn't rely on stocks just increasing in value all the time. So the dot-com recession was the only time when stock prices were higher on a price earnings ratio. This is the Shiller Cape ratio. This is where we are at 40. So this is higher than it was in the Great Depression. I want to remind you that in the dot-com recession, the NASDAQ Composite Index lost 78%. That's almost 80%. That means $1 million goes down to $220,000. That's pretty hard to get through. It took 15 years to come back to even. So that is why we do age appropriate, properly diversified, and we have an entry and exit strategy for whatever it is that we're going to own. So again, a lot of people aren't aware that we actually have about $108 trillion in total debt and loans. You hear a lot more about the almost $40 trillion in public debt. So remember, before you buy, you want to know what your exit strategy is. In our pie chart system, the exit strategy is rebalancing once, twice, or 3 times a year to capture gains and make sure that you keep your portfolio age appropriate, properly diversified. Again, if you are buying SpaceX as an individual company, you may be buying high, hoping that you can possibly sell higher. So again, get safe, hot, and protected in one easy plan. We're teaching these strategies. So if you haven't ever learned the life math that we all should have received in high school, join us on Friday for 3 days. We have nest egg strategies, we have how to increase performance strategies, and we have what's safe. So $1 million earning 4%, that's $40,000 extra every year. If you only have $500,000 in your 401k or your IRAs, that is an extra $20,000 in income every year. You want to make sure you're doing that without paper losses. And we've had no paper losses in our fixed income side portfolio. Also going to have an Are You Ready for Retirement masterclass the following Saturday, and you should start with your first job. And again, part of this is stop making everybody else rich and start building and keeping your wealth now. So again, this is a time-proven 21st century plan. And we can talk about dollar cost averaging. We can talk about rebalancing, all of that. You can get your own free sample pie chart using our free web app, email info@nataliepace.com. And we also are going to be having, I want to show you one other thing, just in case you're near Santa Monica on June 14th, we're going to have a financial freedom game on the beach at 4 p.m. Pacific time. Email info@nataliepace.com if you're going to be in the Santa Monica area. So Charlotte, I know we're very close to time, but do we have any questions?
We do have a couple of quick questions here. This one from Eddie. He was asking, what about the UFO ETF instead of the NASA ETF?
Okay, and obviously this is just a real like 2-second overview, but let's take a look and see who owns it, right? So have you ever heard of the company called Procure? So let's just see who owns that. So again, these are very smart marketing people. That doesn't mean that they are well funded, and they're probably not publicly traded. So Procure ETFs. Again, I'm looking real quickly to see who is behind it, right? About Procure. Let's see who is the team. Looks pretty young to me, the co-founder CEO. But let's see, probably links over to LinkedIn. So he's been in the ETF market for about, what, 15 years? He's a capital markets person, but they're not telling you again how well funded the fund company is. So in my 2 cents, I would not be going there. Again, you chances are iShares is owned by BlackRock. That's a hundreds of billions of dollars publicly traded company that's cash positive with profit margins. And that's the big difference here is I would not be buying any of my funds from companies that I don't know what their how well capitalized they are. And again, the smaller companies are going to have bigger problems in these areas. Is there another quick question?
We do have one more quick question. This one's from Initials XY in the chat. He's asking, will Redwire RDW benefit from SpaceX IPO? Will it go higher, in your opinion?
And what was the symbol again?
RDW.
Let's see. Now, I always like widgets. So what we're going to do here is we're going to look at the company. Integrated Aerospace and Defense, Advanced Technologies. So oh, and it does low Earth orbit. It's located in Jacksonville, so that's good. It's close to Cape Canaveral. I'll tell you what, I will look at this one in greater depth. And maybe I'll be including it tomorrow in my video conference. So email info@nataliepace.com. That is one that I don't know, but I always am going to want to put it through our stock report card and ask the 4 questions before I give an answer on it. And I'll try to do that before our video conference tomorrow. If you have any other ideas for companies that you think are going to be the widget provider for SpaceX, we'd love to hear about it. Email info@nataliepace.com. Thanks.
Fantastic, Natalie. Thank you so much. I did go ahead and put that email address into the chat for those of you watching live. You can feel free to copy it if you would like to reach out. Natalie, thank you again for a wonderful presentation. It's been a pleasure, as always, having you on the show.
Thank you so much. Goodbye, guys.
Goodbye, everyone, and be sure to stay tuned for those watching live, as we do have more in store for you in this Money Show Virtual Expo. Have a wonderful rest of your day.